Bitcoin has had a tremendous 2021 so far, growing over 110%. Compare this to the S&P, which has done around 20%, and we can clearly see if you did not own any Bitcoin, then you missed out on some great returns. Michael Saylor is one of Bitcoin's biggest advocates. His now infamous Bitcoin investment has doubled to over $6 billion, so I can imagine he's feeling pretty good right now. In this video, we're going to be breaking down the Bitcoin proposition and why Michael Saylor believes there is still $100 trillion that's going to be moving into Bitcoin over the coming years. So, 3 things to cover. Why Bitcoin is the perfect example of the hedgehog concept. We'll see where this $100 trillion is going to come from. And then we'll finish up with why the retail investors have a big advantage over the institutions and corporations. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, before we start, one of the best principles I learned for consuming any information, whether it's a video, a book, a conference, anything, I learned from ancient Chinese philosophy. And I learned this from Bruce Lee. Quite simply, absorb what is useful and discard what is not. So, even though you may not agree with everything Michael Saylor has to say, it doesn't mean that everything he says isn't useful. I think he has developed some excellent comparisons for Bitcoin, even though I personally still like altcoins. Okay, first up, Bitcoin is the perfect example of the hedgehog concept. What do I mean? Let's take a look.
If I have $1 billion and I put it in the fiat currency and move it over the Visa rails and the Fed wire, then it takes 1 to 2 months to move it. Every time if I make a charge transaction before final settlement, it's going to be 30 days before you know that you're not going to get clawed back, and another 15 days or something. So 45 to 60 days after I pay you for something, you can move it. So you're talking about velocity of 6 per year. Annual velocity 6 per year. I put the same money on the Bitcoin Lightning Network, and the velocity is 6 per minute, 6 per second, 6 per hour, right? You're talking about a velocity which is orders of magnitude higher. And then, of course, the cost is, the Visa network is 2%, 2.5% friction. Cost to move $1 billion of transactions, $25 million. The cost to move $1 billion on the Bitcoin network, 68 cents. The cost to move that on the Lightning network, if you break it into like 100,000 transactions, is going to be 100,000 Satoshis, right? So there's nothing comparable, right? It's a revolutionary transaction network, and it's also a revolutionary monetary network, both at the same time. It's like kind of dual revolutions, because in one case you can distribute economic energy to billions and billions of people billions of times an hour, and that is something of wonder. And in the other case, you can store $1 billion of energy in a battery for 100 years and still have the energy. And we don't have any other credit or cash or asset instrument or property instrument where you could store $1 billion of economic energy for 100 years.
So Bitcoin is the perfect example of the hedgehog concept, and it's the story of the hedgehog and the fox. It says the fox knows many things, and it tries many different strategies and tactics to get what it wants. The hedgehog only knows one thing: to curl up into a spiky ball. Yes, Bitcoin is not programmable like these fancy layer 1 smart contract platforms. It only does one thing: a permissionless, trustless financial network. But that's why it's so valuable. Nothing else can do what Bitcoin does, and Bitcoin doesn't need to do anything else. That is why it makes up about a quarter of my crypto portfolio, about 25%. But unlike Michael Saylor, I do think there is value in other cryptos. Next up, Michael Saylor believes there is still $100 trillion coming into Bitcoin. So where is this money going to come from? Well, spoiler alert, the migration from investment property to digital property. Take a look.
Well, first, I just wanted an alternative to crumbling cash and crumbling credit. I just wanted the number not to go down. Like, most people don't think their number goes down when they're holding dollars, but once you understand the inflation rate, you realize your purchasing power is going down if you're not keeping up with the cost of capital. I think the epiphany comes when you realize that it's the dominant digital property network, and digital property is better than physical property in every way conceivable. So if I theoretically designed digital property, I want to store $1 billion. I want to hold it in the palm of my hand, move it at the speed of light, vibrate it 1 million times a second. I want it to last forever. I want immortal, indestructible, infinite, all-powerful, programmable energy. Right? Matter is energy. Energy is matter. I can convert energy. I could take $1 billion and turn it into a building. I could, in theory, turn a building back into $1 billion. I can buy $1 billion worth of electricity. I could buy $1 billion worth of guns. Whatever it is you want to do, right? That, money is ultimately monetary energy, and you can convert it into any kind of product or service or property. It's the apex. Once you realize that Bitcoin is digital property or digital money or digital energy, all of these things, then it becomes clear that everything else you could possibly own is inferior to that. I think what you're going to see is $100 trillion worth of capital flow out of investment properties in the developed world into Bitcoin.
So his thesis is that Bitcoin, being digital property, is a superior store of value than investment property. Digital property requires no maintenance, no tenants, no ongoing fees, it isn't tied down by a physical location, and it can last hundreds of years. And personally, I do believe these are all valid points, and he could well be right. I personally just don't have the kahunas to go all in like Michael Saylor. I still prefer to diversify. Okay, to finish up, Michael Saylor makes a great point about an advantage the retail investor has over the big corporations. Take a look.
And this is what I say to entrepreneurs. If you have a Bitcoin company, there's a 99% chance or a 99% failure rate for most corporations over a long enough period of time, right? There's a lot of, there were hundreds and hundreds of companies that wanted to be Apple's iPhone. And how many companies wanted to be Instagram? And how many companies wanted to be Facebook? And how many companies wanted to be Amazon? For Amazon to win, 15,000 retailers have to lose. Okay, so competition is good for the underlying network. It'll be great for the protocol of Bitcoin. It'll be great for the asset value of Bitcoin. It's not good for the competitor. Like, you're going to have to fight tooth and nail, with every iota of your energy to succeed in whatever market you choose to go into. The competition is good. The more options there are for Bitcoin securities, the better it is for Bitcoin. The more options there are for Bitcoin wallets and Bitcoin exchanges, the better it is for Bitcoin. And the more competition in Bitcoin mining, the better it is for Bitcoin. The more Bitcoin mining rig companies, the better it is for Bitcoin. Bitcoin wins no matter what happens.
Michael Saylor and his company MicroStrategy was the first to convert cash on the balance sheet over to Bitcoin as a protection against inflation. Since then, his investment has doubled to now over $6 billion. Bitcoin is a perfect example of the hedgehog concept, which means it can only do one thing, but it does it to a really high standard. It's arguably the best financial system we have ever created, and it doesn't need to do anything else. We now have the ability to send and store money with instant finality for pennies on the dollar in a trustless, permissionless, decentralized way. Michael sees Bitcoin as a superior form of property ownership, and when the world catches on, he sees $100 trillion moving from investment properties over to the new digital property. And Bitcoin has given the smaller retail investor a big advantage, as we were able to front-run the institutions, and we don't have to deal with the shark-infested, bloody waters of the business world. All you have to do is buy and hold. So, there you are, guys. Hope you enjoyed. Remember Bruce Lee's principle: absorb what is useful, discard what is not. We may not always agree with everything Michael Saylor has to say, but he still has some great insights. For now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.